Good evening, everyone, and welcome to this webinar on financial reporting and corporate governance, delivered to you by Professor Neerav Nagar from IIM Ahmedabad. It is overwhelming to see so many participants joining in this webinar from various parts of the country. And thank you for so much. Thank you so much for joining us this evening in such a large number. My name is Amit, and I'll be the moderator for this event tonight. Please allow me to begin this session by setting some ground rules. Please ensure that your audio is muted throughout the duration of the webinar. You will be given a chance to unmute and ask your questions towards the latter part of the session. You may please leave your camera on if your bandwidth supports. During the session, if you wish to ask a question or if you want to make a comment, please put it in the chat window below. And during the Q&A session, please use the raise hand option if you want to ask a question. I will unmute you so that you can ask your question directly to Professor Nagar. Thank you. Now, let me take this opportunity and introduce you to Professor Neerav Nagar, our speaker for this session tonight. Professor Neerav Nagar is Associate Professor, Finance and Accounting at IIM Ahmedabad and the Faculty Chair for this program. He is a PhD holder in accounting from IIM Calcutta and has over 17 years of rich experience in teaching and research across reputed institutes. His area of research includes financial reporting, quality and disclosures, corporate governance, and executive compensation. Professor Nagar is also an active member of the European Accounting Association, and has many publications, awards, and honors to his credit. Welcome, Professor Nagar, to this webinar, and thank you for taking the time on a Saturday evening to engage with our participants.
Thanks a lot.
May I request you to take over the session? Professor Nagar, over to you.
Thank you, Amit, for such a wonderful, nice introduction. So very good evening to all of you, and glad to be in front of you to talk about this program, which we are going to start off this year. The topic is financial reporting and corporate governance. As the name suggests, the primary focus of the program would be on financial reporting and corporate governance, right? So today the plan is I'm going to start with discussing about the interaction between these two fields, right? And I'm also in this process, I'm also going to talk about some of the research which has taken place in these areas, right? So it's a very comprehensive, vast area. So I'll just try to give you a snapshot, right? And post that, I'm going to talk about the contents of the program and few other important things which you should be knowing, so that you can take a call whether this program is right for you, right? I hope you are able to see my screen. I'll wait for a few seconds. Yeah, please wait. Yes, is it okay? All right. So now you'll be able to see the screen, and let me start. So so basically, when we talk about financial reporting, and most of you must have come across three primary financial statements which we talk about, right? Very popular names: balance sheet, income statement, cash flow statement, right? So we have a very crucial document which comes out from any company, which is called as annual report. And that annual report has a lot of information about the business, right? But always the center of attention, the focus is always on these three statements, right? One, obviously the most important thing which this course focuses on is how these financial statements are prepared. Okay. And I've always believed, and as I've been teaching accounting and financial reporting and analysis here since now almost 8.5, 9 years, that no matter whichever field you are working in, right, whichever domain you are working in, you just can't run away from these statements, right? You need to develop that ability to understand, what is there in these statements, right? Which items appear in the statements, and why do certain items appear in one statement and not the other one, right? And overall, how to interpret the final numbers which come, right? So items as well as the numbers, right? So these three statements, as I mentioned, right? So every statement has a focus on something, right? So when we talk about the performance of the business during a particular period, we focus on income statement and cash flow statement. So while the income statement or the profit and loss account, the popular name, would focus on the sales or revenues versus expenses, the cash flow statement would just focus on from where cash has come in, where cash has gone out. While the balance sheet would focus on the position of a business, what belongs to you, what do you own versus what are your obligations, that is what do you owe to others. So in the program, obviously our focus would be on these three statements, but we are going to learn lot many things about how to analyze the numbers which come in, which tools and techniques you can use in, and how is the what is the impact of the corporate governance on the reporting which we see in the annual report with the help of these three financial statements, right? And so the thing is that as soon as we know that managers also know, everybody knows about this, that if the performance of a business is to be assessed using the statements, managers always think a lot about what is the profit number which we are going to show, right? What is the cash flow number which we are going to show, what is the asset value which we are going to show. They keep thinking about that, and the scenario becomes very interesting because revenues, now for example, revenues in the income statement, right, a very popular term. Now everybody looks at what is the revenue firm is going to earn in this particular quarter or this particular year. No, so investors are looking at this, analysts are looking at that, and they build an expectation. Okay, so firm showed a revenue of X rupees last year. This is the revenue which we expect from the firm this year, and these expectations have been built up in the market. Maybe few months down the line, you are going to announce your results for the new quarter or new year, and what happens if you don't get that revenue, right? So the expectation is Y. Are we going to get less than Y? Are we going to easily surpass that Y? And that brings in the tension, right? So if you think about a scenario where there is an expectation from the market that you are going to generate or report certain amount of revenues during a particular year, and if you think that most probably you're going to miss that expectation, then what managers start doing, they think about can we manipulate the numbers, can we play with the numbers somehow so that we do not disappoint the analysts or the investors, right? And then there comes the problem. So ideally everything would be okay in the accounting world, reporting world, if managers are always truthful and report the performance and position of the firm by applying common sense, whatever accounting standards are in place, and with full honesty. But that does not happen. So in the scenario I gave you, if you think if you're not going to match the expectations of the stakeholders or investors, then you start playing with the numbers, right? So managers get the temptation. Okay, can I show more revenues than what is the true number, right? I'm going to show 100 rupees of expenses in my statement. Can I bring them down so that I can boost my profit up? Remember, what is profit here? Revenues minus expenses, right? And that way, you start thinking about playing with the numbers so that you can actually fool the stakeholders. And that is not a surprise that actually many people fall in this trap. And what you see here are just few examples, right? So the manipulation starts at a very small level where you will just manipulate the numbers maybe by few thousands, and then the magnitude keeps on increasing. And what you see here is actually the revenue or the sales number that comes in P&L or profit and loss, that is the most often manipulated item, no matter wherever you go in the world, whichever country you go. And even some big companies have done this, right? So the name of Coca-Cola is right at the top, where the sales which they should have recognized in the upcoming quarters, just because they faced a lot of pressure in the current quarter, they tried to pull this now and just report higher sales, right? So so I've given some examples here, right? So so basically what happens is, whether you are uh, showing higher revenues than what is the true number, or whether you are misstating the items which you see now, the expenses items, cost of goods sold, or the inventory in the balance sheet, or there are other expenses. Again, WordCom was one of the firms which did it, or the final line which I mentioned here, that you know, yes, there are the items must appear in certain categories in the financial statements, but what do? You misclassify them with some, again, some intention, and the intention is not good. The intention is that you want to make sure that investors, the analysts, don't feel disappointed, right? So you don't want to give them a negative surprise, and you just look for different tricks for manipulation, right? That is the idea. Now, the thing is, how do you put an end to this, right? The easiest thing is, if everybody is honest, it would not happen, but unfortunately that is not true in this world, right? So coming to that, this is something what happened in Satyam, right? Everybody must have heard about this. And again, the kind of manipulation happened. And remember, this was one of the manipulation of fraud, which we came to know because the CEO or the chairperson himself accepted before the word, right? And so we are actually, I can safely say that we are actually sitting on a pile of frauds like this, which we are simply not aware of, right? And so how to put an end to this, right? So that is what I'm going to come to now. So whenever these kind of manipulation of frauds happen, generally three conditions are present, right? So incentive, there's an incentive to manipulate or commit a fraud. There's a pressure to manipulate or commit fraud. Managers have an incentive, but they also get an opportunity within the firm, right? Nobody stops them, right? So they have an opportunity to commit this manipulation, right? And finally, the attitude. The attitude is linked to the honesty argument which I made. And let me start with that. So basically, you have if the people are unethical, right, they would not mind manipulating the numbers and fooling others, right? That's the core idea of this. This is not measurable. This is observable, right? But I can't quantify it. And maybe you have hired a CFO who thinks that, okay, everybody does manipulation in this world, in this country, in this industry, so let me also do it. So what's wrong with that? And if this kind of attitude is there, the manipulations would always happen, right? And now comes the pressure part as to why do managers actually go forward and manipulate, right? And I've just given some of the examples, right? Very popular one. You basically need funds, right? You need funds at low cost. People are not ready, right? So you want to impress them. How do you impress them? You show the better performance to them, which is actually not a true one. So as I said, you whatever numbers you're going to report in the financial statements, you just inflate them, show a better performance so that the lender gets excited about the performance of your business and is willing to give money. That's one of the pressures, right? Nowadays options are big, so the managers are getting compensation in the form of either stocks, restricted stocks, or options. Right now, what happens, the idea of these options was that you incentivize managers to take risk, but these options, these stocks, obviously so basically the payoff for the managers is now linked with the stock price, right? So managers would have an incentive. Okay, I do not want stock price to go down. So how do I ensure that the stock price does not go down? I just make sure that the people are not disappointed with the numbers which I report in financial statements, right? I do not show a loss. I do not show a decline in profit. I do not show a decline in revenue. And if I do that, the stock price will increase or at least remain at the same level, right? And that way, that creates a pressure, or that creates an incentive. In a way, that's an incentive also, that I'm incentivized because I have a lot of options with me. I have a lot of company stocks with me, right? And people try to make money using insider trading. A lot of cases have happened in the throughout the world. Debt covenants are basically the conditions which are set by the banks when they give money to firms, when they give loans, right? So yes, there's an interest rate based on your risk and the duration, etc., but some covenants are there, right? Covenants are, for example, you cannot pay dividends until we allow you, right? Your profitability should not go down below certain level, etc., right? So what happens is, so these conditions are set by the lenders. Now if you are able, if it happens in a quarter or year that you might miss this, miss any of these covenants, then managers might be tempted to do something with the number so they do not violate this covenants. Remember what happened. If you violate these debt covenants, then either a penalty may be levied by the lender, or in the worst case scenario, the loan may be recalled, right? So you do not want that to happen. So again, it's kind of a pressure, putting a pressure on you that you want to manipulate. And sometimes firms manipulate because they are failing, right? They are failing and they think if we manipulate, we can survive for a long period of time. Unfortunately, the research has suggested that that is not true, right? So if you manipulate, it might help you for a few months, right? But in the long run, as it is, you are going down, but because of manipulation, it is sure that you're definitely going to go down, right? So that was idea about pressures. But even if I have incentives in front of me, I can manipulate only when the controls within the firm are so weak that I can go ahead and manipulate and nobody is going to stop me, right? So in terms of non-accounting frauds, that is what you saw, what happened in Neerav Modi's case, the PNB, right? But we are talking about accounting frauds, and in accounting frauds, there can be a lot of governance mechanisms, a lot of controls which can make sure that the managers do not get opportunities to manipulate, right? So I've given again few examples here. There's a board of directors, right? Board of directors in a corporate setup who actually act as an intermediary between the shareholders and the managers, right? And these board of directors, not only they work, they meet together, but they also have small committees. And one of them is audit committee, which is in a way a crucial gatekeeper along with the auditors when it comes to the financial reports, right? So what researchers suggested that if these guys are not financially literate or not auditing experts, the probability of fraud and manipulation would be higher, right? Yeah, the second point is related to that. If the boards are not independent means they are biased, they are partial to the people who actually run the firm in day-to-day course of business, right? So for example, and what I'm saying may not always be true, but there is a lot of research on this side that there's a CEO, right? And the CEO has got his or her friends on the board, or the family members on the board. Now, if you have got the people who are so comfortable with each other in terms of how much they have known to each other or how much they worked with each other, there's small possibility that these directors may not go against the CEO, right? They may not want to disappoint him or her, and that's why if they cannot question the CEO, then it is less likely that whatever decisions which are taken by the firm are not challenged by the board, and the shareholders, other minority shareholders we are talking about, right? Who do not have as much of voting power, they might suffer, right? And the top management might always take decisions which are in their best interest or in the best interest of the major shareholders, right? And that's why there's a lot of research which says that the boards ideally should be independent so that they can question the top management, ask tough questions, and help the minority shareholders in getting their due, right? And some of you might be aware, actually in our country now we have got not now but actually since several years now, regulations as to how many directors on the boards should be independent so that they can act in an unbiased way, right? Interestingly, there's a lot of research on gender diverse boards. For example, getting more women on the board, it helps the boards to function effectively. It helps in improving firm performance. That kind of research is there. uh, what if CEO is also the chairperson of the board? Does the CEO get a lot more power now, right? Or there are two arguments here. If the CEO is also chairperson of the board, then he or she has got a lot of power, right? And he or she can get anything done what he or she wants. The other side of the argument here is, again, that is coming from research, that such a person would always think, because he or she has got so much of power, he or she would always all good decisions would be executed in a quick period of time without any interference, right? So there won't be any obstacles, right? So in that sense, the power is being used for right reasons, right? So few more, I mean, there was a time when having audit committee was not compulsory. So the research started then said that you got to have an audit committee so that the frauds and manipulations do not happen. Audit committees should be meeting frequently. Uh, it matters where who is auditing, right? Whether these are the big four firms like Deloitte, PwC, etc. If they audit, then manipulation is less likely, the quality of earnings is better, etc. But having said that, some of the biggest frauds we have seen there, the auditing was done actually by the big four firms, right? So that is always not true, but on average the research has found that yes, the audit made by the big four auditors, they are good because they have got some really nice standard set practices which can help in controlling this kind of behavior. Auditor tenure, how much auditor has worked with a particular firm, that matters, right? Whether auditors specialize in the business they are auditing, right? So an auditor never having audited a banking firm audits a bank, right? So audit quality might be poor in that sense. So overall, and how much, do they really have time? Do auditors really have time to do multiple audits at a particular period of time, or they've got a very small team and the number of assignments are very huge? So the whole idea of this opportunity stream, which is very important here, is that the examples which I just discussed in this slide and this last slide, right? This is basically saying that if if the governance in a firm is very strict, right? Whether it is coming from the board of directors, the committees on the board, or the auditors, or the CEO himself or herself, managers would not have opportunities to manipulate, right? And the sanctity of the financial reporting, which we want to keep. What is the whole idea of financial reporting? The three statements which we are talking about, that when we look at those statements, we should be able to assess the performance of the firm, true performance of the firm, without any bias on the hand of the managers. So if the governance is very strict in a firm, right, managers would not have opportunities to manipulate, and the accounting will play the role for which it came into existence. And this is where exactly the governance and financial reporting is actually linked, right? That if the governance in a firm is good, it is likely to lead to a better quality of financial reporting. You can trust the numbers which are coming out in the annual report. That's the whole idea, right? So I mean, there can be a big discussion here. I can go on and on, but what I wanted to just give you a crux of the idea, right? That what do we mean by governance? There's so many other things which we can talk about when we talk about governance, right? But I wanted to keep it focused at the board level largely, right? And so following this, so when we planned this course, we thought that, okay, we are going to, we are going to, bring something to the table which is unique in the sense that not only it talks about, not only it focuses on financial statements and their analysis, but we'll also bring in governance so that people don't forget that ultimately the reports we see, the numbers we see in the financial statements, ultimately everything, human has a role there, right? So people are there. So if people are not behaving properly, then you can't trust the numbers, right? And when I say people, actually we are coming back to the governance side, right? So governance has to be strong. So we said, okay, we are going to have a mix of both, and we are going to discuss the interaction between both, right? So let me talk about the contents of the program. And so the first thing, obviously, what we are talking about is very crucial, is the financial accounting part. So those three financial statements: income statement, balance sheet, cash flow statement, right? As I said, even if you're not an accounting professional, right, these statements will come, right? And I tell my students every time that these statements are going to haunt you again and again if you're going to run away from them. So the best thing is just accept them, try to understand them in a very intuitive way, right? And so, and that's why I want to highlight that when we teach accounting here at IIMA, not for once we talk about debits and credits, right? And I have seen students over so many years that they're afraid of just debit word, credit word, ledger accounts, T accounts, etc. When in this program, when you are going to study accounting, I promise you, not a single time we are going to talk about what is debit credit, but we'll ensure that you're going to understand how these statements are prepared, what is the significance of each and every statement. If some items are appearing in one statement and not the other one, why or why not, right? And we use the first line, as it indicates, we use a very intuitive method of accounting equation, which is very simple, and it's a common sense method and does not need any knowledge of technical jargons, right? So if the interesting thing is, which again I'm sharing from my experience here of teaching PGPs as well as PGPX students, that when I see the chartered accountants, the many accountants also come for MBA, and initially there's an hesitation that, oh, accounting equation, we are so used to debits and credits, is it really going to help us? But by the end of the program, they have forgotten debits and credits, and they also move to accounting equations. It's such an intuitive method, right? So so we would make things very simple for you when it comes to teaching you the preparation and the interpretation when it comes to the financial statements, right? We'll also discuss how these statements are linked to each other. That is very important, right? So these statements can't be looked in isolation. Okay, let's prepare back. This is, traditionally the way accounting was taught, right? When I studied my accounting earlier in my undergraduate, do income P&L first, balance sheet second, then finally one day cash flow statement would be discussed. No, all three statements are linked to each other, and the way we are going to teach you is that you'll be able to link them and appreciate the usefulness of all these statements, right? So the first one. The second one is that, yes, you can, obviously, when these statements are prepared, you have to go forward and then analyze these statements, right? So one way of analysis is I just have a look at these three statements and I see different items and numbers, and I can see if there's an link between them. But actually, I can use several tools and techniques, right, to analyze the numbers. And so the second module, we focus on financial statement analysis, where we talk about something which is very popular, ratios, right? But the way we are going to differentiate here is, right, I think it's very easy, and it looks childish in the sense that when you see a ratio, you say, okay, like if you have heard of return on equity, ROE, right? Very popular ratio. Oh yes, ROE of firm A is better than firm B, right? So firm A is better, right? If I stop there, that does not make any sense, right? What are drivers of ROE? If a firm A has got better ROE than B, why is that happening, right? Okay, what is driving that ROE? And if for a particular firm that ROE is not, ROE is going down over the years, why is that happening? What is that which can be improved in the firm so that the ROE can improve? That is what we are going to focus on, because anybody can tell that 15% is greater than 13%. But that is not what we want to do. We want to tell you that why is firm A has got 15%, why is that firm B has got 13%, right? That will be our focus on. And the last line on the slide, that, many times we when we look at ratios, we simply look at it in a very financial point of view, right? That everything is very technical, but sometimes the way we see the numbers, that is simply a result of, particular business model a firm has adopted, or particular strategy a firm has adopted. So, we are also going to bring that to the table, that so that you can appreciate the ratios are just more than the numbers. Okay, some other things. Point number 2, comparative and common size, how to compare different firms, right? Peer analysis, what we talk about, how to compare different firms in a particular industry, or at a particular period of time, right? One of third point, implications of accounting choices and estimates. Accounting has, accounting gives actually a lot of managerial judgment is involved when financial statements are prepared, right? And the simple result of this is that, if you're talking, so something which is very popular, let me take an example, like depreciation. So many of you might have heard that word, depreciation, right? Now, two firms are using two different accounting methods for depreciation, right? So obviously the numbers which we see in financial statements would be different, right? How do you compare? How do you compare when two firms have followed two different methods, right? So we are going to discuss that how can we bring these differences in picture when we compare both the firms, right? So rather than ignoring this, we are going to worry about that, and then think about how to control for these kind of things, right? And within the same module, which I have not mentioned here, is and I should have mentioned this earlier, that actually though I'll be teaching you a lot of financial accounting and financial statement analysis, including governance part, but I'll be assisted by two of my colleagues, Professor Prashant Das, who's a seasoned real estate expert, right? Having taught abroad for several years. And he's also going to focus on analysis, particularly analysis of service industries like hotels and real estate investment trusts, REITs, right? So, so that would be part of the financial statement analysis. The third one would be taken by my second colleague, Professor Ankit Karia, who would be focusing on the cost accounting information. Now, remember, there's a lot of internal product level, service level cost information is available to the managers of a firm, which is only for insider use, right? So that you can basically take decisions on cost control, etc. Right? But this information does not go out in the annual report. Okay, so how to analyze this internal cost information, right? So there'll be a module on that also, which Professor Ankit Karia would be talking about. Then obviously this is something which I talked about today, right? So managers can manipulate earning using different techniques. Okay, how to detect that? First of all, what are those different techniques which managers use, right? I don't know whether some of you might have heard about it: accruals, real, classification shifting, misclassification, etc. What are these, right? How do managers manipulate? And the idea is not to tell you how to manipulate. The idea is to tell you how to detect this manipulation. And also, very importantly, which I always tell my students, that hey, if you do this, you will be caught in this way, right? So detection is very important. And the main message is that once you start manipulating, one day you'll be caught, right? And no matter whatever happens to your company, but your personal reputation might go down when you engage in these kind of manipulations, right? So what are the causes and consequences? How do you detect it? And finally, the module on corporate governance, where we talk about, in a corporate setup, what are those different conflicts of interest which happen, right? How to resolve this? What are the mechanisms, right? So I talked about one of the internal mechanisms today when I started, right? Board of directors, right? There are external governance mechanisms like regulator, SEBI, for example, Securities and Exchange Board of India, right? Analysts also play a role because they analysts ask tough questions to a firm. So that's an external governance mechanism, right? So we'll talk about all those mechanisms and the directors, yes, and family ownership. We have got so many family firms in this country. We have also got complex business groups, right? And that creates own set of challenges when it comes of governing the company. And the whole idea here is that if you don't have this resolved, corporate governance, good governance, then that is going to have an impact on the numbers which you report, which you cannot trust as a user of the financial information. Okay. And maybe I'll just go ahead. So key expected takeaways in short, following from the content, right? Essential accounting and analytical knowledge. You will be able to analyze the performance and position, learn different tools and techniques like ratios, and appreciate them going beyond the numbers. What are the causes and consequences of fraud and earnings manipulation? Implications of good and bad governance, right? Uh, what shareholders, what stakeholders might suffer if the governance is not good, right? The focus would be on that also, right? So we would encourage you to join this program. And this is just first point. So it is not only for the non-finance professional, let me tell you in the beginning. So you can join if you're a non-finance professional who is not in, say, an accounting or the finance department of the firm. But as I said, either you have to interact with the finance guys or accounting guys, or somewhere as part of your job, these statements will come to you, but you don't know what is happening, right? Or the finance professionals, right, who want to do away with the jargons and actually want to learn a very intuitive way of preparing financial statements, right? to understand particularly that, the story behind the ratios, right? So impact of strategy, impact of business models on ratios, right? And obviously the governance part, right? What impact does the governance have on reporting? And I can present this, who must join in a different way also, in terms of, whether you're a governance professional, right? This is an opportunity to go beyond the rules and regulations. I mean, yes, particularly, for example, if you're a law student, if you have been a law student or a company secretary, right? While you must have gone through several rules and regulations, right? It is very important that you understand what was the logic behind them, what is the research which is linked to them, right? And what impact does it have on the reporting? As an investor, right? Even if this, it may not come as part of your day-to-day job, but if you invest in stocks, right, or mutual funds, this might help you. But here I must put a disclaimer that this is not an investment class, right? So we are going to discuss different tools and techniques of analyzing financial statements. But if you ask me, sir, which stock would I invest? No, this is not the course for you, right? Because when it comes to investing, a very crucial part is the valuation, right? How do you value a stock? Whether the stock is undervalued, overvalued, that is not part of this program. This program focuses on how do you analyze the numbers, right? Whether this company is good or not. That's all. Whether this company is performing good or not. That you will be able to do, right? Investing is much more than that. Okay. If you're an analyst, whether you're a business analyst or you are a financial analyst, very popular analyst reports which come out from broking houses, right? That kind of an analyst, or a business analyst working in a consultancy firm, right? This would help you because you'll be able to analyze businesses in a different way. If you're a lender, you are interested, you want to assess whether this firm is doing well, whether can you extend credit to this business based on the performance or position of the firm. If you're a consultant, as I said, and finally, if you're an entrepreneur, right? And so I've been having taught several entrepreneurs. I must share this that many times these entrepreneurs have come back to me and told me that before this program, I mean, yes, this program is being offered for the first time, but having taught them in other programs, and they have told me that now I'm able to ask questions to my chartered accountants, which I was not able to do earlier. Earlier they would bring statements to me, I'll sign and done, and I would not understand what is going on. So if you are an entrepreneur, you will be able to analyze your business in a much better way, understand and analyze your business in a better way. Yeah, I've talked about the teaching team. Yes, we are going to do a lot of case studies, right? So that's the hallmark of the way things are taught at IIMA. Almost every session you are going to have a case, and at this moment I must tell you that these are basically either real life or inspired from real life events, so that you can put yourself in the shoes of the protagonist and then think, how am I going to solve this problem? So you're going to see a lot of cases here, but importantly, which we say later on, that so this is not passive learning. So if you're joining this, if you're planning to join this program, then you have to be very committed that when you come to the class, you're going to be 100% prepared. You must have read the case which we assign for a particular session, and there might be associated readings also. So we are going to give our best, but we are also going to ask for your best. And in that way, we are not going to be lenient. So you should join the program only if you're really 100% committed. No half measures here. Yes, there'll be lectures on some particular issues, right? There'll be a lot of there'll be few role plays. Particularly, I love to do that in case of governance, right? We might have, we are going to have mock board meetings, right? And a few other role plays, right? So that so we think that role plays play a good role in, so that you can understand a particular issue in a better way. Exercises, yes, some numerical problem solving, and some presentations. Finally, some important piece of information which you must note: you must apply by November 10th. If you're interested, do look at the brochure for the exact timing. The course, so there are 32 sessions in the program, out of which 24 would be online, spread over 12 Saturdays, 2:30 to 5:30 p.m. Right. So again, so if you are interested in joining, make sure you are available during that time. Okay. And and yes, overall, which I have not indicated to you, that to get the certificate of participation in this program, it is mandatory that you have at least 80% attendance, right? Otherwise, you're not going to get the certificate. So you have to be committed. So just maybe a week before the program starts, we are going to share with you the exact dates, exact those Saturdays when the classes would happen, right? And finally, we are going to end this program with a campus module where you are going to visit the IIMA campus, be here for about 2-3 days and attend 8 sessions here, so that we can see each other, meet each other, and which is more fun, right, than the online sessions, right? And particularly good for role plays, right? So those dates are freezed, so you can note these dates. You must be available on these dates. That's all. So happy to take questions now. Yeah, please go ahead, Amit.
Thank you. Thank you so much. While I was actually listening to you, a thought came into my mind, credit what comes in and debit what goes out. This is how I learned accounting, in high school and also during undergraduation, which was a fantastic and a very fresh, perspective to finance, to accounting, and to corporate governance. We, Professor, have quite a lot of questions coming in the chat window, and of course, we will also one by one unmute the participants who want to ask the question directly to you. But let me start with a few questions first from the chat window, referring to one of your later slides as to who must join this particular program. There are quite a lot of similar questions coming in, so I'll just try and club it together. Um, Roshan wants to know if any prior knowledge of accountancy, accountancy, finance, corporate governance, is it necessary, and or would it be difficult for a person from non-finance or non-accounting background to grasp the subject?
A wonderful question, Roshan. So I'm 100% sure, and I can guarantee you that even if you have never studied accounting, you will be made very comfortable in this program. In fact, initial roughly 6 to 8 sessions would be on preparation, and it will be very easy for you to just enter this particular field and start appreciating the numbers and statements, right? And that particularly happens because, as I said, we are going to do away with jargons, right? The technique which we are going to use, that will make things very easy for you. So most welcome.
Thank you so much, Roshan. I hope this answers your question. We have quite a lot of chartered accountants on this session today, and they actually want to know how will it add value. They're already chartered accountants. They have been practicing accountancy and all that. So how would this program add value if they're a chartered accountant?
Okay, so first of all, if you look at the first module, right, where we are going to discuss few things over first 6 to 8 sessions where you might have read about them, studied about them, right? But that also we do it in a different way, right? Which is going to help you in appreciating the statements and numbers in a better way. But everything else, right? I'm sure, because I myself have interacted with several CAs, and in that sense, everything else what we cover would be a value addition for you.
Right, right. So for all the CAs out there who have joined the session, definitely this will add quite a lot of value to you. Very interesting question. I'm looking forward to see how you respond and how you add value to this particular question. We have Gurpreet who wants to know whether the financial reporting side of the program is it very India specific, because he works for a US mortgage company and wants to know if this program, especially the financial reporting side of it, would be beneficial for him.
Okay, so the kind of issues which we discuss, right, those learnings you can apply in any setting, right? So yes, that is true that when it comes to preparation of statements, the regulations, largely the regulations are same across the world, but yes, for certain specific items, it might happen. The accounting treatment for one item might be different in the US as compared to the India, right? But we are going to keep the discussion as that you can apply it in any setting, right? And the other thing which I wanted to add was that yes, because yes, what is not possible, and that's why I would like to, in that sense, moderate your expectations in the sense that like you're working in the mortgage industry, right? So that it is not, because everybody is coming from different industry here, so it is not possible that we would definitely have a case on say mortgage industry, or we are really going to analyze the mortgage industry. So this applies not only to your industry but others also. So yes, we are going to have cases, exercises from different industries, but there is no guarantee that every industry would be covered, right? But having said that, what you learn, you can apply it in any setting.
All right. Okay. A quick note to the participants. Of course, we are glad to receive your questions on the chat window. But if you have, if you want to ask, unmute yourself and ask a question to the professor, please use the raise hand option and we will unmute you. Moving on to the next question, and this is, I'll read it out. Professor Lakshmi wants to know that she has a 15 plus years in financial planning and accounting with 3 postgraduate degrees. She is 50 years old and wants to know whether this course will be useful for her. She is also looking for a job after gap of 3 years. Would this program be beneficial to her?
Okay, so I guess age is not a bar here, but having studied so much, right? Maybe if you're thinking about this course, then you feel that uh, there's something is missing in terms of what you learned, and maybe that is going to fill in here. So, I mean, you're most welcome. Obviously, there'll be a lot of takeaways, right? But because I don't know exactly what you studied at different points of time, I cannot comment, right? But age is not a bar, because having taught people of your age in different programs, right, something similar, right? So you can expect something good to learn.
All right, thank you, Lakshmi. I hope that answers the question. Professor, during your session, you have covered things like what would be the online modules be like, what would the campus immersion or the campus visit look like. There are a couple of participants who wants to understand the preparation material of this program better. Would we give out PDFs? Would we give out kind of handouts to them for them to refer later on?
Okay, so most probably for the online sessions, we are going to have a Moodle in place, right? Where we are going to upload all this material. So Moodle is our internal, website where there's one page where we are going to share all this material with you. So at this moment, the most of the material would be obviously online in PDF format, right? Which you'll have to download, maybe arrange for printouts at your end. Okay. But in that sense, we are very systematic that, as I said, there's no passive learning here. So, you'll get the material well in advance, because we expect that you will read and come prepared to the class, right? But in terms of printed material, when you come to the campus, right, then we are going to, give you the copies of the material for all those sessions which are going to take place on the campus. That is during the campus module.
All right. Thank you so much. Let us take some live questions. We have a few participants who have raised their hands. We'll go one by one. Participants who have raised their hands, I'm going to send you a request to unmute yourself. So if you're joining in from a laptop or an iPad or a mobile phone, please look at the screen and just accept the unmute option. We'll go first to Mr. Sandeep Singh Chima. He has raised his hand. Sandeep, I have requested to unmute yourself, please.
Yeah,
Yes, Sandeep.
thank you. Professor, can you hear me? I completed my
Yes.
MBA from IIM Calcutta in the year 2007. So finance and economics were my majors, but it's been quite a gap since I studied finance, and I've been working in real estate industry for all this time. I have when I saw the course material, I was particularly interested to refresh my knowledge in finance, particularly on the analysis part. So after this interactive session with you, I understand that the course is very beneficial. So a lot of my queries are already answered. My particular query was that after going through this course, I mean, before the start of this course, do I need to read some material, some books on basic finance or financial accounting, or should I just come and get into the course with a fresh mind?
Right. So no prior preparation is needed, but yes, just a week before the program starts, we are going to share with you the readings, at least for the first few sessions, and that you have to ensure that you read and come to the class. Right. That is okay. But before that, nothing required. You have to read only what we suggest to you.
Okay, great. Thank you.
Thank you so much, Sandeep. I hope that answers your question. Anybody else who wants to unmute and ask a question directly to the professor? You can just use the raise hand option on your screen. Right, there are, while we wait for participants to raise their hands, there are quite a lot of questions in terms of, the fees, in terms of, the dates for the campus, which, Professor Nagar has already covered, but we will do it, a little later towards the end of the session. We have a question from Mr. Balasubramaniam Mahadevan. I am requesting you to unmute. You may please go ahead with your question now.
Good evening. I am Dr. Balasubramaniam. I work at Mumbai Lilavati as Chief Medical Officer. I have done a couple of courses from IIM Ahmedabad, executive course in hospital administration and strategic management. So I would like to know whether you give completion certificate at the end, because normally they issue only participation certificate from IIM Ahmedabad. And what will be the duration of the course? Because I have not gone to the brochure. I just came today. I joined late, and sorry, I am not aware of the duration and what is the requirement for this course.
So Amit,
Okay.
I think that for the benefit of everyone, we can share the single slider so that everybody is aware about the format of the program.
Right. All right, if you are able to see my screen, let me just take a moment here and take you through some important details here. The duration of the program is for 4 months. It's a blended program with online sessions on Saturdays, 2:30 to 5:30 p.m. Through live, interactive, direct to desktop sessions. So from your home, from your office, you can join these sessions. There will be a campus visit of 2 days towards the end of the program on the 27th and 28th of February next year. We've had a couple of questions if the campus dates can be changed. No, it cannot be changed. These are the final dates. We've also had some questions with regards to the fees. There is an initial application fee while making an online application of 2,000 rupees plus GST, and a total program fee of 1,78,000 plus 18% GST, which of course is payable in 2 installments of 89,000 plus GST each. The application window is currently open. So in the next 5 minutes, I'll just put the link to the registration link. If you are interested, you can just register online right now, because we are accepting applications for this program. The program commences on the 19th of November, and the last day of application is the 10th of November 2022. Right, any other questions? If you want to put it in the chat, if you want to ask any questions directly to the professor, we are happy to take a few more.
So I'll maybe just answer one question which Bala had raised. So yes, there's a certificate of participation as it is mentioned, because we do not have any evaluation during the program. Okay, no exams, no evaluation. So Bala, generally certificate of completion is given in those programs or modules where there's an evaluation component.
Right. We have a hand raised by Vitinder Kumar. Vitinder Kumar, if you are with us, I will, send your request to unmute yourself. You can ask your question to the professor now.
You have mentioned about the graduation of 10 plus 2 plus 2. There are certain people who are having a old school 10 plus 2 plus 2. There are multiple degree holders.
Vitinder, I can't hear you.
Yeah, within the, I think what you are saying is 10 plus 2 plus 2 graduation, are they eligible, right?
Yes.
Can you be clear about what is 10 plus 2 plus 2?
There were certain degrees that were on.
Okay, your voice is not audible. Okay, probably within that, what we will do is we will catch you up offline. Your voice is not audible now, or you can post your question to the chat mode so that we can have a better understanding. Because what we wanted to understand exactly what the 10 plus 2 plus 2 graduation is first.
Thank you so much, Vitinder. You can just, in case if you are still online, you can drop your question in the chat window, or else we can take it offline post this session. Any other questions that we have from any of the participants, please put it in the chat window or just raise your hand and I'll be more than happy to unmute you. So yes, post this session, we will send out the details through an email. The registration link will be emailed to you. I've also mentioned the registration link in the chat window. If anybody wants to register online right now, they can do it. Let me just go through the chat window once again, Professor, and see if we have missed any questions. We have one question which we initially missed. Nikita wants to know, how will this program help her transition to a higher position in the organization?
Okay, I mean, that's a tricky question because there's so many things which come into play if that has to happen. But what I can promise is that there'll be value addition. Okay, whether that really translates to a higher position, that I guess you and your actions are going to decide.
Right. Thank you so much. We have one question from Sudesh, who wants to know a little bit more about the earnings manipulation and the fraud management aspect of this program.
Yeah, so maybe I'll just give an overview, few points on that. So what we are going to discuss is that as an analyst, if you are trying to analyze the financial performance of a firm, your main worry is that are the numbers true? Are numbers reflecting true performance of the firm, or are these numbers manipulated ones, right? So if these numbers are manipulated ones, right, number one, how they have been manipulated, right? So which, so the popular names which I used earlier is whether accruals, it's a technical word, so many of you would not be able to understand. So whether, accruals have been used to manipulate, or few real actions have been used, or you're just misclassifying items in financial statements. So in that sense, there are different ways in which managers can manipulate, right? So that it is important to understand that, because there are different ways in which these can be detected. Then, so the point two would be, how can I detect this? So accounting research has built several models. In accounting research, there are models which can be used. These are largely regression models. These regression models can be used to detect these kind of manipulations, right? Similarly, for example, not only the magnitude of manipulation, but also straight away, if I want to identify whether a company X is committing fraud or not, right? So when I say fraud, there's an extreme level of manipulation, right? So there are models to detect that fraud also. So how is research tried to detect these kind of frauds? Is you look at the numbers in the financial statements, but you also look at the other information which is scattered in the annual report. And I'll give you an example here, right? And I'm talking about non-financial information, and some of the frauds in the US have been caught based on this non-financial information. For example, a few cases, what had happened is, and the investigators observed that, for a particular company, year on year for 2-3 consecutive years, the revenues were increasing, the sales was increasing, right? But the surprising thing which investigators noted, that even after so much increase in sales over 2-3 years, there was not now there was no change in the number of employees for working for you. There was no change in the retail space or the number of stores you had. So there's a disconnection between this. So if your scale of your firm is really increasing, that not the financial numbers are indicating something while the non-financial information is indicating something else, right? So this was just an example. So using both financial and non-financial information to detect fraud and manipulation, right? That's the idea largely. But yes, then we are going to bring in governance, right? So whether governance, and in fact, governance itself has been used as one of the predictors of fraud, right? So if the board is not independent, that itself indicates that the probability of fraud is higher, right? That's an overview. I hope it helps.
All right. Thank you so much, Sudesh. I hope that answers your question. Professor, please allow me to take a couple of more questions which have come in.
Sure.
Sure. Of course, Sandeep Chima, we will come back to you, unmute you, and you can ask your question. But before that, we'll go back to the chat window. We want to know, Alok wants to know whether case studies for this particular program are same which are taught in the MBA program of IIM Ahmedabad.
Yes. So one thing which I can commit to you is that when I or any of my colleagues, when we enter a classroom, now whether that's a MBA program, PGP, PGPX, or one of the executive education programs like this, or another way, whether it's an online class or an offline class, our commitment does not change, right? So our efforts are similar, no matter whosoever is in the front of us and no matter whichever mode is. So linked to that, right? So we choose the best possible case studies for you. And we don't think that, this is this program. Yes, we might use different cases in different programs or, or different modes. One, because the case may not suit the audience, right? So, particular audience might learn a lot more from one case and not the other one, or a particular case or exercise is not suitable for the online mode. Those kind of differences can be there, but there are perfect, valid reasons for that. In terms of commitment, in terms of the quality, there is no compromise.
All right. Thank you so much. Before we conclude today's session, we are going to go back to Sandeep Singh Chima once again and ask, allow him to have one last question. Sandeep, I have unmuted you. If you can please ask your question.
Yeah, thank you, Professor. Professor, I have two quick questions. One, is the session going to be interactive one, similar to the one that we attend during an in-class session? Particularly, the question is that many times what happens is students like us, we say, Professor, please repeat, please say this again, please touch this topic again. So is it going to be that way?
Yes. So see, I know you will also understand this. That
second question is, as
please
per the second question is, sir, that are these sessions recorded, and recording available for any missed session, and a person would be able to mark their attendance if they go there through the entire recording at a later date and time?
Okay, so I'll second part would be answered by the VCnow team. Let me first reply to the first one, which is sorry, Amit, it just slipped out of my mind. I was about to respond. The first point was about the interactive, right?
Yes.
Yeah. Sorry. So sorry for that. So see, the interaction would not be as lively as like that in a physical classroom. Let's accept that, right? But having said that, we have been doing online teaching for now several years. Even the pre-COVID period, we were doing that, right? So we generally, like, for example, when I'm teaching, I generally set some ground rules before I start, right? That people just do not, start speaking suddenly, just when they want, right? So they have to follow certain, like in Zoom, we follow, raise hand, then allow the professor to, take your name, and then you go ahead and speak. And in that way, we try to, make the session interactive. And as you asked, can I come and ask again? Yes, once or twice it can happen. But because there are so many questions, they're not, lot many opportunities. But yes, as an instructor, we are always sensitive, and we know that if I'm teaching something, if I'm discussing something, at once you may not get it. It might take some time, right? So yes, we come back to you, you can ask, we can debate. In fact, we will always try to create, whenever we are doing a case study, our main objective is to create a debate between the participants. We always say, we are facilitators, right? Rather than we are teachers, right? So in a case study, we are trying to achieve that. We are going to try to achieve that. So in that sense, it would be interactive, right? No doubt. Okay. But you are going to see the best kind of interaction when you are here for the campus module, no doubt. Okay. And yeah, and also, which is very important, that interaction would happen as the class is on. But once the class is over, that connection does not stop, right? So you would be able to write to us separately that, this was a topic which was discussed. This is something which I did not understand, right? So in fact, I'll go ahead, and what I'm going to do is, this is my plan for this particular program, is you'll be able to connect on email, but also on phone calls. That way you can better communicate, what is that, what you did not understand. And so that in that way you can catch up, right? But that is only if the something you are not able to ask during the class, because they'll, depending upon how many participants we have. But don't worry, we have got plans for everything, and in that sense we are not going to disappoint you. Okay. Before handing over to you, just one more comment which I want to make, because the case studies, a question came few minutes ago. So the case studies which we use would be from either published from IIMA or Harvard or Ivy Stanford, right? So in that sense, the material will be the best in the business.
All right. Thank you so much, Professor.
Yeah, I'll take the second part of the question.
Yes,
I'll take the second part of the question. Recording is provided for missed decisions. First point. Subject to you raising a request and approved by the IIMA Executive Education team. And by attending a recorded session, you don't get an attendance. You can only catch up with the last class. Attendance, if you want attendance, you need to be physically present. Sandeep, am I clear on this? Sandeep? Okay. Yeah, fine. You can go ahead, Amit. I think it's time now. We can wrap up the session.
Yes, absolutely. So thank you so much. This actually brings us to the end of what has been a fantastic session today, and it's coming from me, who's completely into non-finance and non-accounting. I enjoyed it thoroughly. I'd like to thank Professor Neerav Nagar for giving his time this evening, engaging with us, and for sharing his valuable insights on the topic. It was a delight to hear it tonight. I'd also like to thank all our participants who showed up in such a large number this evening for our webinar. Without your participation, of course, we would have not been able to make this event a success. Before I say my final goodbyes, I'm just going to quickly share a screen with the contact details. Of course, many of you would have already been in touch with our counselors, our program managers. If you need help with registration, if you need help with any other details that we may have missed, please reach out to our counseling team. So the first number is for our academic counselors. The second number is of Mr. Rohan Joshi, who's our program manager. If you are an HR, L&D, training manager, training head, and if you're looking for corporate sponsorships, please take down my number on the screen and my email ID. Please reach out to me, and I'll be more than happy to answer your questions. So thank you once again. Thank you once again, Professor. Thank you to all the participants. And until we all meet again, I wish you all good luck, good evening, and a very good weekend ahead. Thank you.
For those of you who have not received the brochure copies, so just after the webinar is complete, you'll receive a mailer with the brochure, so that you have the entire information, and also the link of the application, online application link also will be made available to you on mail. So just keep an eye on your mail. Okay. Have a nice weekend.
Right. Thank you, everyone. Thank you.
Thank you. Bye.
Thank you, Professor.